Welcome to Illuminati Silver. We tell you the truth about silver. Today is Thursday, the 24th of December 2020, and we're going to look at another major organization's gold and silver price prediction for 2021, which interestingly tends to suggest, by implication, that perhaps we should consider swapping our gold holdings for silver. So let's take a look. Now, before we look at another 2021 forecast, just a quick shout out to some of the videos we've already published this week, because we appreciate it's the run-up to Christmas and you may not have had the time to look at these. On Sunday, we produced our Bitcoin versus gold and silver episode 3, where we talked about the disadvantages of Bitcoin and cryptocurrencies. Then on Monday, gold rises above $1,900 and silver above $27, but will they hold? Tuesday, gold and silver fall back as IMF issues caution. And then yesterday, our $5,000 gold and $100 silver pumpers reviewed. And we've published or placed links to each of these in the description box below. Now, in recent weeks, we have enlightened you with a range of forecasters predicting the price of gold and silver for 2021 and beyond. These have included the likes of Goldman Sachs, thelongforecast.com, capital.com, investinghaven.com, Harry Dent, who was the most pessimistic of all, Capital Economics, and a slew of others. And as we have said, over the Christmas break, we will be publishing our 2021 gold and silver price forecast. But today we thought we would bring you some interesting news quite recently published by RBC Capital Markets, where they basically tell us that 2021 and 2022 will prove somewhat bearish or uneventful for gold. In fact, an uninspiring forecast for gold. But these years could herald the start of a major bull run leg for silver. So let's take a look at that very article. S&P Global Market Intelligence, article dated 21st of December 2020. Headline: RBC Capital Markets forecasts lower 2021-2022 gold price. The price of gold may have peaked in 2020 according to recent analysis by RBC Capital Markets. With COVID-19 relief on the horizon in the form of vaccines, RBC analysts forecast a potential halt to climbing gold prices. This view is largely driven by somewhat sticky investor allocations, physical line items in our balance trending back towards historical norms, and an improving macroeconomic backdrop, which still houses some gold-positive tailwinds, RBC analysts said in a December the 17th note. This shakes out not the dizzying heights debated by the market earlier in 2020, but rather more measured declines over the course of each year. RBC pegged its 2021 gold price forecast at $1,810, down from a previous forecast of $1,893, and its 2022 forecast at $1,785. All of these prices are lower than current levels, with a few quarterly average exceptions, but moderately so, as we are not out of the woods yet, the analyst said. The price of gold has retreated to under $1,900 an ounce in recent months, after breaking through $2,000 in August. Some analysts have said they expect 2021 to remain bullish for gold, pointing to ongoing government stimulus, among other factors, as potential support for the price. Precious metal prices climbed in the week ending December 18, with gold closing just under $1,900 an ounce, following dovish commentary from the US Federal Reserve, Hayward Securities analysts noted. Also aiding gold has been a multi-year low US dollar, which has been under pressure following an increasingly optimistic outlook that lawmakers are soon to reach an agreement on a $900 or a $900 billion COVID-19 relief bill, the analyst said. Hayward analysts said they continued to favour exposure to precious metals through mining equities, citing gold's seasonal strength from mid-December through the first quarter. On a similar theme, Bloomberg commodities analyst Mike McGlone pointed to silver's potential on the back of gold. Uniquely precious and increasingly industrial, probabilities lean towards the metal known as leveraged gold, following its yellow period to new highs, McGlone said in a December the 21st note. To McGlone, the silver price looks set to rally as it did in the aftermath of the 2008-2009 financial crisis and form a new and higher base. There's a good chance that the 2020 low at about $12 will be as enduring as about $8.50 from 2008, which hasn't traded since, he said. A silver bull market may just be at its starting point, McGlone said, though silver prices dropping and staying below $20 an ounce would be a bearish sign. End of article. So if RBC capital markets are right, we should, theoretically at least, be considering moving out of gold and into silver as we head into 2021 and beyond. Now, to some extent, we can see the logic of that, providing, of course, we believe that the economic recovery is literally around the corner. After all, if manufacturing begins to pick up and green energy is pursued aggressively by most countries around the world, then yes, indeed, 2021 and beyond will look more favourably on silver than it will on gold, simply because of its industrial applications. However, if you are a dollar doom merchant and you believe a financial collapse is around the corner, then perhaps sticking with gold, or at least not selling your gold, is the safest strategy to adopt. This is why we have often stated that it is wise to have a balanced portfolio of precious metals, or at least a sensible proportion between gold and silver. Going all in with one over the other could theoretically earn you significant profits, but it could also leave you with significant losses, as those who purchased silver in 2011 and 2012 and 2013 rapidly found out. With gold currently standing at $1,877 against its high on the 6th of August of 2067, and silver currently at $25.81 against its high this year of $28.89 on the 1st of September, and with a current gold to silver ratio of 73:1, and you compare that earlier in the year when it actually exceeded 121:1, in fact on the 18th of March, it is difficult to make the calculation as to whether you should swap gold for silver. Swapping out at a GSR of anything over 100 would have certainly made sense in retrospect, but now one has to ask, is it too late? Well, as just mentioned, much really does depend on how you foresee the next couple of years panning out. And by all means, please do share your thoughts on this subject below. Now, tomorrow we shall be publishing a Christmas video, but in case you're too busy to listen to it, may I take this opportunity, on behalf of Greg, Marcus, Anthony, Richard North, and of course myself, to wish you a truly Merry Christmas, or for the non-religious amongst you, a happy holiday, and to thank you for your support throughout these past 12 months, which we know have been phenomenally difficult for most, if not all of us. And as always, we wish you a safe and prosperous year ahead. And finally, of course, if you're not a subscriber and you do not wish to miss out on our daily videos, then please subscribe now by pressing the relevant button, whether you're on a mobile phone, a tablet, or a computer, and also to press the bell sign so you're notified of our videos as and when they're published. Now, if you can, try not to miss tomorrow's video, because we shall be making an announcement of a unique gift to our paying members of our inner sanctum. So don't miss out on that, because it's somewhat special. Thank you for listening. Until tomorrow. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.